Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Search International Limited. And here is your weekly technical analysis of Paris milling wheat, London UK feed wheat, and European processing potatoes. I'll start with Paris milling wheat. There's a lot going on here, quite a lot. First off, the question I asked here some 5 weeks ago, and which had until last week still not been fully answered, is, I quote, "Is this action since the May high a bearish halfway hesitation, or is it a lopsided, it looks better if you discount the May spike down, anyway, a double bottom? Question mark, end of quote." Well, last week I pointed out that there was no longer the chance of a bearish halfway hesitation. However, it didn't look much like a double bottom last week either. Well, since the action of this past week, it now looks like we do have a double bottom established, an Adam and Eve type. So looking ahead, we have an initial potential target X in the 232 area, with a secondary potential target X1 in the 236 area. Next, the one pattern that I did recognize over the last couple of weeks is the chance of a monthly key reversal up for July. I'd put down here, if we close tonight either over 213 even or under 209.5, then we're beyond. As you can see, we have easily fulfilled the criteria for a monthly key reversal up for July. Next, and this has only happened this past week, but we have fulfilled the one thing we have done actually in this whole time is we've set up the criteria for a weekly key reversal up, and that has been fulfilled for this week as well. Finally, the action since the low in July to date is indicative of a bullish halfway hesitation stroke bull flag type action. This became clear yesterday with a new recent high and even a higher one today. A new recent high and higher close not seen since mid-May. An initial potential target X2 for this pattern is in the 229 area, with a secondary potential target X3 in the 232 area, the same area as the one for the initial double bottom action. There's a lot to comprehend, I know, in what I've just given you, so take your time, replay this video as often as you like, as often as you need, until you can see what I'm talking about, okay? Okay, so looking around, we have supports at these levels. They're not that close really, but hey, whatever. The recent 50% Fibonacci line at 212 3/4, the gently rising long moving average, currently 212 1/4, the falling medium moving average 209.5, and the 50% Fibonacci line of the August 2020 to January 2021 move at 206 1/4. And then there's two strapping 50% Fibonacci levels that held the market up 3 weeks ago and caused the subsequent rise back up, the one that we've seen. They're the September 2019 to January 2021 move at 200.75 and the big old 2009-2012 move at 200 even. As you can see, it's a lot below the market. Meanwhile above, well, we've cleared the one real level to look at, which was the 220 area, which is now support. And with that, I guess we'll now have to start looking at those potential target levels overhead as not only targets but as resistance. London UK feed wheat. The halt to the fall here in this contract in July, I put down more to 3 factors. Congestion from March to June 2019 between 161.95 and 165 3/4. Congestion at 162.70, 162 even and 161 even. And probably above all, to the big old 50% Fibonacci line of the 2012-2016 move at 164 even. Since then, prices have pulled back up but started stalling once they came to the June low at 179.35 and the June to date downtrend currently 175.80 and to be retired. This is what happened at the start of last week when prices started to move back down again. Now, interestingly, the 50% Fibonacci line of the September 2019 to May 2021 move at 172.10 that was and is below the market did nothing on the way down, back at the start of July. However, I put that down to changeover, and it most certainly started to have an influence this time as prices late last week and early this week would not approach it. Part of me wished to look at the action since June until last week as a possible expanding descending wedge pattern. However, another part was not too keen on that idea, other than as a way of showing the market channeling lower. I thought last week that perhaps what I saw was a large bearish imperfect channel. However, that doesn't fit the reality. There are, however, two bullish patterns that fit the reality, but both are very tenuous, to say the least. The first is a bullish shift pitchfork for the July action. It is thin, it is acute, and I'm finding it hard to have confidence in it at such an early stage, or even to love it. Secondly, is to look at the July action as a possible bullish halfway hesitation. Now this has some more promise, but it is also a tenuous pattern. An initial potential target X for this pattern would be in the 188.80 area, whilst the secondary target would be in the 191.70 area. These are doable targets, but I would draw your attention specifically to where targets X and X1 sit. Target X is just above the older 50% Fibonacci line of the August 2020, May 2021 move at 188 even. But it is also just below the more recent and current, and therefore perhaps more potent, 50% Fibonacci line of the May to July move at 189.45. Hence, though they're not far apart, the lower target X seems to be an easier opportunity than target X1, even though it's hard anyway. And X1 is only just a little further away. As I've already said, they are both tenuous patterns and to be taken with a heavy pinch of salt. Looking elsewhere, we've recently had a dead cross. Yes, I know it is a lagging indicator, but anyway, of the medium moving average, currently 193.35, down through the long moving average, currently 195.75. These two moving averages crossing is usually seen as a major action, but well, here, we'll see what happens. Anyway, the medium moving average is now moving lower into the frame of the market. Additionally, the short medium moving average, currently 186.65, is moving at a rapid pace lower and will impact the market most likely early next week. I'm hoping to see some clearer action for next week. European processing potatoes. One of the features of using continuation charts on futures is that you occasionally get huge gaps after changeover. This market is an example of just that. The market was going sideways in the 13.8 area when suddenly, huge gap up. Not that I'm complaining of the direction. As you may recall, I highlighted a bullish bow tie formation at the beginning of May, which would indicate a possible move higher some 15 to 20 trading sessions after the, let's be honest, imperfect crossover of the moving averages. The kick-in was due between the 24th of May to the 1st of June, and dutifully we had such a move up, if only because of changeover. Now what is interesting about the latest move up is that despite some large gaps, the bullish Andrews pitchfork for the November 2020 to March 2021 action is still valid. All that has happened is that the market moved up from the middle time, currently 17.1, tested the upper time, currently 21.7, failed there, and went back to the middle time support at the start of July. Since then, prices have moved back up, but they seem to lack the energy to really push higher to the upper time again. Prices actually stayed within a band between the support of the 50% absolute Fibonacci line at 17.5 and the Fibonacci congestion at 18.5. Now this might carry on for a bit, you might think, but I suspect not, as the middle time will rise enough to impinge upon this band at the start of the week after next, with all that may mean. Additionally, the short medium moving average, currently at 16.7, is now rising and paralleling the middle time, thus perhaps reinforcing it as support. Anyway, the week after next may be the one to watch, assuming we continue this within this 17.5 to 18.5 band that we've been within basically these past 3 weeks. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.